that you may have, demystify what's going on in the world of blockchain, and hopefully be in sync with the objective of this conference, which is to chart a path forward for Malaysia and for the region. My first question goes to Raafi Hossain, CEO of Fasset, who was formerly served as advisor to the UAE Prime Minister's office and also advisor to the world's first Minister of Artificial Intelligence in Abu Dhabi. Raafi, perhaps you can introduce our audience to what does it really mean when we're talking about blockchain real-world assets?
Absolutely. Absolutely. So, when we think about blockchain, we think about all the news that comes out with regards to crypto. It's usually bucketed under this term called Web3. And I kind of wanted to start this session with our friends here on what is Web3. Now, to understand what Web3 is, we'll have to understand what Web 1 and Web 2 are and what they used to be. For Web 1, if you're old enough, you would know that Web 1 was all about being able to log online and read different articles from encyclopedias and different news outlets back in the 90s. So, Web 1 was the advent of the internet. It was when we could look at information one way. Now, Web 2 was, if you think about the age of social media that we're in, not only can we read things from the internet, we can write things as well. So if you think about Instagram, if you think about TikTok, this is the evolution of Web 2. So Web 1 was all about reading, Web 2 was all about writing, and Web 3, which is what we're here to talk about today, is all about owning. And why is owning so powerful? When you own an asset or when you own your information, that is the difference between wealth and not having wealth, which we'll get into later today. And when you talk about the potential of Web3, which we'll hear about in a bit, the potential of Web3, the best way I can describe it is kind of looking at what happened between Web 1 and Web 2. So if you look at the early 2000s and you think about artists, you think about content creators, you think about people who like to write, people who like to produce music, people that like to expose their work to the world. In Web 1, you would have to go through producers, you would have to go through agents, you'd have to find someone who's willing to lend or for you to pay for their platform. Now, think about what happened with YouTube, with Instagram, with TikTok. That huge difference between Web 1 and Web 2 is that difference. That for the first time, if I'm a music artist, I don't have to go through Sony, I don't have to go through DreamWorks. I go onto YouTube and show my talent to the entire world all in one go and have an equal chance as the biggest Grammy-winning artist in the world. So that difference and what that unleashed, especially for our markets here, was extremely powerful, right? Going from Web 1 to Web 2. So when we think about what will happen to finance, coming back to our topic today, between Web 2 and Web 3, it's exactly that. So today, if you want to invest, from some countries into things like the stock of Apple or the stock of Tesla, or you want to send money from Malaysia to Morocco, the web of things that you would have to do to be able to do that, and the ease or the difficulty that you would experience in trying to do that, that's Web 2. And what happens with blockchain, what happens with digital assets, what happens with tokenization, that difference is what happened between Web 1 and Web 2 for content creators.
Thanks, Raafi. Let me now turn to Ashok. Ashok Venkateswaran is the lead of blockchain and digital assets practice for APAC region at Mastercard. Ashok, you guys have been early adopters and entrants into the blockchain digital asset space. Can you tell us what you see in this space that's beneficial or that gives a competitive edge to you and to your customers?
Surely. Can you guys hear me? I think firstly, I want to just thank the organizers for organizing this event, right? I think it's really important for people to really understand this space. People confuse it with the price of crypto and the blockchain technology. We continue to build solutions in the blockchain space. it doesn't really matter to us what the price of crypto is. So I think that's an important distinction that we need to make. So as our earlier participant said, the world has kind of evolved, and Mastercard is building a number of solutions to really address this changing environment. We are a payments technology company, and the key element for us is make it easy for the users of our technology to make payments easily. And as this blockchain technology and the Web3 world really evolves, what we are trying to do is make things easy. So where we really see this going is the ability for you to make a payment no matter what type of asset that you may have in your wallet or in your bank account or whatever the case may be. It should be easy. All right? So as a payments technology company, we initially started off creating a technology for B2B payments. To be honest, it wasn't a really great solution that we built 4 or 5 years ago, but we've evolved and we've kind of grown with the market. And now we have a series of solutions out there which we can provide our partners, both companies like Fasset, companies like the banking industry that we work with, where they can easily move funds on a personal level and on a B2B level. And we continue to kind of evolve this, use this technology as a kind of like a leaping ground to access newer areas that people will spend money in.
Thanks for that. Now, leading on that, I want to turn to Rafe Haneef, who is currently Group CEO of MBSB Holding, which is the company which comprises MBSB Bank and MIDF Group. Rafe is sort of a mainstay in the Malaysian banking scene, has been at CAMB for a while, and a few other places, including HSBC. So, Rafe, you've been in banking your whole career. Today, we heard about an announcement between Fasset and MBSB to collaborate on the development of digital assets. Tell us, what is this all about, and what does it mean for a bank like MBSB to be taking this step in an industry which is quite mature in Malaysia, in a country where most people already have banking services?
Thank you, Asel. I've been in banking for almost 3 decades, and the constant thing I see is the change that evolving throughout the banking practices. 50 years ago, we were buying goods and services with cash. 30 years ago, we moved to credit cards, and then to debit cards, and then wallets came up, and then you have QR Pay, and eventually we're going to move to probably tokenized currencies to pay. And all the shift is happening towards what we call cheaper, better, faster, safer methods of payments, methods of savings and investments. So the key thing for MBSB, as a bank that has been around for almost 70 years, we started in the 1950s as a development bank, helping home ownership, and MIDF has been involved in developing the SME sector and the industrialization in Malaysia since the first Malaysia plan. We need to leapfrog from the traditional banking to what we call a digitalized banking platform. So if you look at the modes of investment, if you go back to 17th century, people used to deposit gold and get a bearer note. In Lombard Street in London, goldsmiths were the banks. They were giving bearer notes in exchange for gold, and eventually that led to the birth of the bond market. In 1693, England issued the first bond to fund the war with France. That was a physical paper. And it took 400 years to take the leap from a physical paper to what we call a demat format, dematerialized format, where the physical scripts were dematerialized. And today, in 50 years' time, that started in the 1970s with DTC in the US, and now we are seeing tokenized assets. Essentially, the underlying purpose is still the same. You are having an instrument to hold the underlying asset. It could be a bond, it could be an equity, it could be gold, it could be real estate, but the form of the instrument has changed from demat format to a crypto tokenized format. And that's really exciting for us because this gives you a cheaper, better, faster method of investment and a lot more secure than the current form of dematerialized format. Plus, we are able to also granularize it. We can create fractional tokens that could be more accessible to smaller investors. So that's a really exciting part for us. And we think working with Fasset can give us access to this new investment to cater for the growth of our customer base.
Okay, great. So perhaps, Raafi, if you want to take a moment to give us, so Fasset is a bank, is a startup based in Dubai. Substantial announcement made today that they're increasing their profile here in Malaysia. Could you tell us a bit about why Malaysia? What is interesting about Malaysia that makes a company like Fasset want to come here instead of perhaps other places in the region that are also seeking to attract high-tech companies?
Absolutely. For us, I think Malaysia, the ethos, especially with the PM's announcement around the Madani framework, resonates very highly with us, as well as what I think is very representative of the Madani framework, which is Malaysia's industry of Islamic finance. We heard earlier today in the opening remarks from the ministers that, one of Malaysia's top exports to the world, one of the top industries that, Brother Raafi is a leader in, is Islamic finance. So that concept of Islamic finance, the concept of Madani, when it comes to compassion, equality, cohesion, equity, is something that really resonates with our mission at Fasset. Not just the market of Malaysia, but that ability to export that framework that Malaysia has built when it comes to Islamic finance. And when we think about Islamic finance at Fasset, we don't think about what makes finance Islamic. We think about Islamic finance from a perspective of being a global standard to how finance should be done in 2024. So an example of this is, there are two primary tenets of Islamic finance, which should be a global standard for the world. One is that, money should not beget money, right? So just because you have money, it shouldn't lead to more money. That's A. B is that any parties involved in a transaction should share risk. No transaction should be without a risk. So now let's look at an example of this. Think about the bond market, right? The more money I have as an individual or enterprise, and the more money I lock up in a bond, I get a guaranteed return effectively, right? Now, that inherently causes the inequality and the income inequality, the wealth gap that we see in the world today, right? Because I have a lot of money, I park it in a secure instrument where I effectively take no risk, and me compared to the other person is going to exponentially win each and every time, right? To the average man. Now, what happens with Fasset, why are we, what is our mission? Our mission is that everyone should have equal access to and equal opportunity to park their wealth and grow as an asset owner, the fundamental thesis of Web3. So I'll give one example that kind of really clarifies this and brings it home. Think about a high school dropout in America, right, who is working at McDonald's, who every month, at the end of the month, is putting $100 in all of the different opportunities that America affords people when it comes to investment. So they're putting $100 in a gold fund that's listed. They're putting part of that money in Apple stock from 2006. And month after month, they're putting that $100 in. Now think about someone from the markets that we serve at Fasset, Morocco to Malaysia. You could be a university valedictorian working at the top multinational in your country, but you will not have equal access at the end of the month, even if you have $500 of disposable income, to invest in the same manner as the high school dropout in America. And that may be because the country that you're coming from doesn't have the mature financial institutions. It may be because the current financial system doesn't afford you that access that your American young counterpart would have. But with Web3, for the first time, it doesn't matter where you're born. It doesn't matter what the state of your current financial system is. It doesn't matter what passport you have. Yes, in all these countries, you can buy Apple, but not in all these countries can you invest in Apple. And that's inherently unfair. So when we think about Malaysia and coming back to it, with the regulators here, with the government here, with this concept of equality in finance, and the way it's branded here is Islamic finance, there's an opportunity for us to piggyback on the Sukuk market or the Rahnu market, and the ability to then put this into a Web3 concept that not only benefits Malaysians at home, but really exports this product and this concept to the rest of the world that is desperately in need. And I think that's represented in our partnership that we announced earlier today with MBSB, where customers in Malaysia will equally and efficiently be able to access everything from international public equities to tokenized commodities. They'll be able to take that gold that they historically convert to Rahnu and do it with a couple of clicks and earn yield and a regular income from the assets that they have. And they'll be able to efficiently move money from point A to point B.
Amazing. So what Raafi is talking about essentially is democratizing access to assets that are available around the world. At Mastercard, Ashok, when we were talking earlier, you mentioned this exact concept of the democratization of access to financial services. Can you perhaps explain that a bit more from your perspective at Mastercard?
Surely. Funky. Here we go. I think it's important for us as Mastercard because we are a network, right? We have billions of people who use our services on a regular basis. Now, what we cannot do it alone. So that's why we continue to explore and look for partners like Fasset, like the banks, to really help us reach those end users who are using our services. Now, the key element for us is that in the past, you noticed that only certain people were able to buy and own large size assets, only available to high net worth individuals. Now, the availability of this new technology truly democratizes, allows anyone to invest. It could be as small as a ringgit to invest in these new technologies, right, and have access. Malaysia is an interesting showcase, primarily because you have a young, well-connected population which really understands some of these areas. And as a part of it, it's really important for firms like ours to support that understanding and continue to educate the population to really understand what is really available to them. And the way we do that is to bring some of these technologies, localize it so that way you have access to it. Now, payments is kind of like the lowest common denominator when it comes to moving money. If you're not able to buy any of these assets, it doesn't really matter, right? So what Mastercard provides is the lowest common area where you're able to use the small amounts of funds in your wallet to invest in any type of assets that may come along in the future. These are assets which are made available by firms like Fasset, which is really interesting to us.
Thanks, Ashok. So next, I'd like to ask Rafe Haneef, for those in the audience that are wondering, how do I get involved in this space? I might have a background in finance. I might have some background in computer science. What are the challenges to achieving success, Rafi, so far that you foresee? I mean, this is cutting edge stuff. I think this is probably one of the first announcements that I've heard of a company like Fasset and a bank like MBSB collaborating to develop. I think DBS has announced certain similar initiatives in Singapore. So from your standpoint as CEO, having been in this sector for a long time, do you have advice for people in the audience who are in and around this space that might, if they had a chance to speak to you privately, you say, this is how you can help us to reach our objectives?
I think the biggest challenge is the mindset shift from traditional form of banking to a more democratized wealth creation platform. Just picture someone who is in their 40s. They've got kids in high school. They're planning to send them to study overseas in 5 to 10 years' time. Need to save in Aussie dollars or US dollars or sterling. They will need to build the savings. And traditionally today we put in a dollar account or a multi-currency account with very low yield. With this tokenized platform, you can start buying dollar assets. You could buy a bit of real estate, tokenized. You could buy a bit of gold. Gold has a correlation with dollar, for example. And you can buy bonds, sukuk, which are denominated in dollars. So you can build a portfolio that meets your risk-reward profile. And using AI, we can customize the portfolio based on your risk and reward portfolio, profile. In the past, this was not possible because to invest in a bond, minimum investment is currently about $200,000. How many bonds you can buy to diversify your portfolio? With the tokenized platform, you could buy even $500 or even less. You take a fractional fractional ownership of the underlying asset. So this is, we are distinguishing this platform from other platforms which were dealing with cryptocurrencies. Here it is backed by an underlying asset. There will be a custodian who will be holding the asset, and this will be securitized or tokenized, and you would be one of the owners, many owners of the underlying asset. So for the people here, you could be an investor who would like to build your nest for various needs, or you could be someone who's an entrepreneur who's looking to raise funds. So today, if you want to raise funds in the traditional method, you need to have a minimum stake, at least 100 million ringgit in order to raise money from the, the ACE market or the second board. But with the tokenized, what we call the native tokenized assets, you can go straight to the IEOs, where you could offer even 10 million, 20 million offering. So for the SMEs, there will be a lot of opportunities for fundraising in the years to come. But all this can only happen if the demand side grows. So the tokenized platform, the exchange, need to bring in both the buy side and the sell side. So we will bring a lot of different types of asset classes, and there must be a shift for people to buy, so the demand side must grow. These are the tokenization of existing assets. Once we see active trading in the marketplace, there'll be great opportunities for SMEs to come with the primary offering through the IEOs. There are 2 IEOs in Malaysia. I'm sure there will be more once we see the marketplace growing. I'm quite positive. Looking at the experience in Singapore, UAE, and Indonesia, there would be a great appetite for tokenized assets in Malaysia.
Great. Thanks for that. Now, I do want to open up to questions from the audience. I'm happy to share this mic since it's a bit noisy in here. I'm going to ask one more question to Fasset, and then if you have questions, please be ready, and we'll jump right into it. So one of the announcements, or of the many announcements made this morning by the Minister and by the Prime Minister, is initiatives that are being announced to attract and facilitate investment and presence of high-tech companies in Malaysia. So perhaps, Raafi, since Fasset has been on the ground in Malaysia for a few years, dealing in a somewhat complex issue of getting licensing and regulatory approval, can you tell us a little bit about your experience working here, and either suggestions you have, or at least a sense of how things work here, and why, again, it's attractive?
Absolutely. I would say that, for Fasset, we've had a presence in Malaysia since 2021. And we came here purely, very conscientiously, understanding a few things. One, understanding that, the financial system and the structure here in Malaysia is very, very strong. It's very robust. Whether you're working with Bank Negara or Securities Commission, there are very thoughtful people who understand the trends in which the world is moving, who have a very robust system at their disposal, and where innovation is highly not just accepted, but encouraged. That's A. B is, we also found that in this part of the world, working here in Malaysia, with the talent that resides here and that is moving here, is particularly attractive for a startup like ourselves, who want to come here, want to work with excited, aspirational young people who can, co-build this with us as a kind of a global-based startup. And finally, I think today is, I would say, a peak moment of that vision. Being able to work with, talented Malaysians that exist on our team, talented individuals that have moved here on our behest, get willing regulators who are willing to regulate a brand new industry, like with the experiences that we have with Securities Commission Malaysia, as well as our very strong supporters out of Labuan, and then being able to then work in tandem with a bank that's based here to kind of bring all of this together and bring it to the people.
Thanks. Okay, I don't know if there's a mic, but does anyone have a question? And if you have a question, just raise your hand. I'll come over and meet you. Okay, great. And just introduce yourself, and a question, not a speech.
Hi, my name is Steve. I'm from Janjila. Just a quick question on real-world assets, right? Digital assets. Can you explain the difference between leverage tokens using real-world assets versus, for example, decentralized finance? Because I realize that a lot of people or companies that use real-world assets tend to create another token, to leverage some of these assets. Thanks.
So the reality is, if you buy a stock using cash, effectively you're taking exposure to the underlying performance of the company. But if you took a financing, let's say you take a margin financing, 70% leverage on the stock, you're taking not only the performance risk, but also your own credit ability, your ability to pay that leverage. So the issue with cryptos or any tokenized assets is that there must be regulation in terms of how much you can leverage. Because if you have excessive leverage, obviously the demand will go for that particular asset, it will create a bubble, eventually you see the bubble bursting. So the leverage part, it's what that needs to be monitored and regulated. The platform here is looking at buying and selling through the exchange. Tokenized assets initially would be funded by the customers, but if they have if they have built a portfolio, there would be opportunities what we call for staking. Maybe Raafi can talk about staking, and this will allow you to probably create a diversity, more diversity in the portfolio, and this will lead to leverage. So the first stage is not to introduce leverage. This is about shifting your savings to a more diversified portfolio in order to meet a higher return for you. Eventually, leverage will come. That needs to be regulated to avoid any bubble being created.
Yeah, perhaps Ashok and Raafi can talk a little bit about what they see coming down, a little bit about the future as to when these markets become more mature and we're no longer spending most of our time talking about speculative coin, but more about how these real-world assets are being actively traded by everyone here in the room.
So, we're seeing a lot more stuff in the market, right? Initially, it was just kind of the cryptocurrencies that you saw in the market. And then you moved on to NFTs, which was like tokenized art. Both of them kind of had a run, but now we're really seeing tokenized real-world assets, which are like, real estate, invoices. Like I own a handlebar for a Ferrari, right? So there's anything you can be tokenized. And the idea is that it goes back to our earlier statement about democratization, is that you may not be able to buy the asset as a whole, but you can buy the asset in smaller pieces, right? Now, when it comes to invoices, when you're tokenizing invoices, you're able to create liquidity that you couldn't get before. You get a larger pool. In the past, you were stuck to going to a bank, and some of the bank processes just aren't up there yet. But today, you can go to a DeFi protocol, you can go to a bank, you can go to multiple different asset providers to allow you to tokenize these areas and borrow against it. We're also seeing a number of mutual fund companies, large mutual fund companies that I'm sure you've actually heard of, which are also tokenizing assets on blockchain to tokenize. So as a result, there's a shift where the assets being tokenized are of real value compared to an intrinsic value that somebody has put on top of it.
Yeah, absolutely. Ultimately, crypto, blockchain, tokenization, these are technologies. And it's no different to AI. There's good AI, there's bad AI. It's all about the application of how you use these technologies to make a difference. And I think what excites us about tokenization is the ability to turn the way finance is done globally on its head. So currently the global financial system is a debt-based system. But our mission at Fasset, with the phenomenal technology that we have at our disposal around blockchain, is to turn it on its head and really make it a asset-backed system globally, right? So instead of a system based on debt, it's a system based on investments. Now, what does that mean? That means that, when we talk about the product that, Brother Rafe was talking about for MBSB, is that now if I own, a lot of our families, especially in the markets that we're serving from Morocco to Malaysia, we have gold, right? So, your mother, your wife, your relative, oftentimes will be sitting on, let's say, $10,000 of physical gold in their cupboard, right? That's a security that has, from a heritage perspective, has been given for generations. And the purpose of that security is that, that gold will come in handy in a time of crisis, or that gold will continue to mature and appreciate and become an asset for our family. Now, when that gold sits in your cupboard, there's not much you can do with it. But when that gold, in its concept of Web 2 to Web 3, enters blockchain, a bank like MBSB can say, that $10,000 of gold tokens that you have that represent gold somewhere, anywhere around the world, could be in Turkey, could be in Brazil. Now, you as a baker need $2,000 to buy ovens for your new bakery that you want to start. You can automatically with one click, you can give MBSB and Raafi some of your gold. You can create that liquidity that you need for your bakery. You can start a productive business based on your gold investment and based on someone else, whether it's a bank or an individual, providing you the liquidity to start a small and medium enterprise. Now, that's a system that, as we talked about, is very participatory. Anyone can participate on blockchain at the point of giving the gold to a bank, creating liquidity, right? There's a cost to that capital, which is not interest, but it's a cost that the bank is holding my gold and protecting it. They can take that cost can be shared or can be given as a return, staking, to someone who has gold, who doesn't need a loan, but is able to lend it on your behalf so that you have the immediate finances to buy those ovens for your bakery. And while this sounds complex, it is complex because it's complex when you do it manually. But when you do it digitally, when you do it on blockchain, when you do it with an ability to irrevocably give ownership instantaneously to the bank, to yourself, to someone else, within seconds, it becomes revolutionary. And what it ultimately does is move from a debt-based, unequal financial system to an investment-based system that allows everyone to participate at every level.
I think that's amazing. 3 comments on one specific question. I appreciate that. Who else has a question for the panelists? There's 1, 2, 3. Okay, we'll do 3 real quick.
All right, thank you for the excellent panel. I'm all for real-world asset tokenization. My question is, what are the challenges that is preventing this from going mainstream, and how do we overcome that?
Thank you. All right, so through this platform that you're creating, right, would you also be able to buy things like Bitcoin and Ethereum? And if not, why not?
Feel like a talk show host.
Hi, I'm Danny. I'm from Ethereum Kuala Lumpur. So my question is pretty similar. What are the challenges with regulation and government stance towards digital assets? Because it's democratizing financial movements financial movements. So yeah, what are the challenges?
Okay, I think each one can take one. Availability of blockchain and cryptocurrencies, challenges to regulatory, and what was the third one? Okay, 1.
So answering Omar's question, I think right now we're in a path of adoption and a different understanding to how banking is done from this perspective. So one partnership that we didn't highlight is our partnership with Mastercard in Indonesia, where when you do own digital assets, our partnership with Mastercard enables you to spend on goods and services directly from your investments. So it goes back into this concept that when you do make an investment, see, at the common man level, investments are tough, right? Because not only do you need to invest the little income that we make and the little disposable income that we have, but we also have to have enough liquidity, enough cash in our balance to be able to buy our coffee and lunches and rent immediately. Now, once again, what makes tokenization so powerful is that it's open 24/7. So in Indonesia, for example, if you do own digital assets, you make a small, let's say, return in 5-6 minutes from the market, and you need to buy a $2 coffee, you can do that with Mastercard and Fasset immediately from what you hold, what is appreciating in real time, but is also liquid in real time. And to answer your question, Omar, that is one of the biggest roadblocks that Mastercard and ourselves have solved in a market like Indonesia, where you can own, but you can also be liquid almost simultaneously. And it makes it much easier for the average person to make investments, right? And then kind of to answer the question around, Bitcoin and Ethereum, I think, what I would look at, let's take Ethereum as an example. Ethereum is a very, very minute tax for us to all put our assets on a global highway, right? So for example, when I am trying to buy and sell, the gold that we're talking about, that gold is on an international highway that's owned by nobody, that's supported by everyone in terms of all the computers and all the people supporting this blockchain. And that small tax, so you can move $1 million on Ethereum for less than 1 cent. I mean, that's powerful. And that 1 cent would be in the form of Ethereum. So when it comes to cryptocurrencies from that perspective, it's definitely something that should be supported by all countries.
Perhaps Ashok and Raafi can talk a bit about the regulatory side here. I think there's obvious risks. This region has a history of dealing with all sorts of crazy stuff happening in financial markets. So I think probably what I'd like to hear, and perhaps what the audience would like to be maybe more optimistic about, is can we get through these regulatory hurdles so that this marketplace of democratized access to assets can really come to fruition and doesn't get trapped in regulatory capture?
I'm quite confident, given Malaysia's journey in the development of the capital markets. We probably have the third largest capital markets ex Japan and Korea. And that was because of the 20 years of development since the Asian financial crisis, where we pivoted away from bank financing to capital market financing. And what the government has done consciously is to develop both the buy side of the market as well as the sale side. So on the sale side, companies were incentivized to raise funds through various types of instruments. It could be a fixed income instrument, could be a perpetual, tier 1, tier 2, capital instruments, could be equities, and so on. On the buy side, the government incentivized people to invest in mutual funds, in insurance, in takaful, in private retirement schemes through various tax incentives. Many countries failed to develop the capital markets because a lot of development was on the sale side, creating the regulations to issue new instruments and new securities, but didn't put enough emphasis on building the buy side. And that's where I think for cryptos, for tokenized assets, not only we need to have an exchange, we need to have IEOs, we need to have custodians and the likes, the ecosystem, but there must also be incentives to create the demand side. Maybe the government should look at, those who have mutual funds which are based on tokenized assets should also get some sort of a tax rebate to get people to move into new asset classes. And also the understanding, once people realize that this investment is cheaper, better, faster, and safer, naturally there'll be incentive to move. I still remember, before COVID, a lot of people were not keen on using QR Pay because they were not comfortable taking out the money and scanning it and paying straight from the bank account to the merchant. But post-COVID, because we are so used to using our My Sejahtera, right? Everywhere we go to scan. Today we're seeing the handling of cash has really dropped. So more and more transactions are cashless, which means people have moved towards a new form of payment, which is QR Pay, which just 5 years ago, it was not in fashion. So I think this understanding that tokenized assets are real, they are backed by assets which are regulated, because the underlying is still the same. It could be an equity, it could be a bond, it could be a REIT, it could be a real estate. These are all traditional asset classes that the SC is very comfortable in regulating. Is the technology behind it is what that has changed. So in the past, it was physical, it became DMAT. From DMAT is becoming tokenized. So I don't think there'll be a lot of a challenge from a regulatory perspective.
So, 2 years ago, digital assets and crypto was probably a terrible, bad word. Today we're here with a government-sponsored event talking about tokenization. So we're heading in the right direction. And more importantly, I think what we see is that regulated entities like banks, Mastercard, all of us are moving away from doing POCs to doing actual commercialization of solutions in the market. So people are actually seeing usage. We've got companies like Fasset, which is actually moving real money on their network. Similarly, Mastercard today does move regulated tokenized assets on our network, which wouldn't have even thought about a few years ago. So we are headed in the right direction. It continues to evolve and continues to change. And we work very closely with all of our partners to make sure that we continue to work with regulated firms to bring more solutions to market.
Thanks. So we just have a few minutes left. I wanted to make one plug, which is that Fasset, Mastercard, and Czar Capital are hosting dinner tonight, 6 p.m. at the Impiana KLCC on the 15th floor. Everyone is invited. We hope you can make it. Since we got about 3 or 4 minutes left, I wanted to give the panelists an opportunity to give a closing comment on anything that wasn't asked today that they want to talk about, anything about KL20, their hopes, visions, aspirations. Let's leave the audience with something great that they can take home.
As a new bank in town, so we have been around since the 1950s, but we were an exempt finance company. We became a bank in 2018, and we have been quietly building our platforms to help to serve our customers better. So we wanted to make sure that we have the best in class, the most latest investments available to all our customers, and hopefully you will have a great experience banking with MBSB. Thank you.
As I said this earlier, we can't do this alone, right? Blockchain is one of those technologies, doesn't really work if you're the only one playing in the playground. So we continue to work with our partners. We continue to invite people to build solutions, test solutions, reach out to us if there's ways we can kind of help and help you commercialize some of these products. And we are still learning, we're still evolving. So we don't have the answers for everything, but we're hoping that in a way we can partner, we can actually bring some interesting solutions to the people of the country and the region. So, keep doing what you guys are doing. You're doing some awesome stuff.
Web3 boils down to one word, ownership. I would say be an owner. Own your life, own your decisions, own your assets. It will lead to a higher quality life.
Let's give our panelists a round of applause. Thanks for their time and effort and energy today. And thank you all.
Check. Thank you very much, panel. Would like to invite you to kindly pose for a quick photograph to wrap up the session. Thank you very much, Asil, for moderating that conversation. Please stay with us, ladies and gentlemen. We have another panel that will be taking center stage in just a short moment. Our next